This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on Thursday, January the 8th, 2015. Harold has business on Friday, normally tape on Friday, but Harold is busy, very busy over the weekend. We'll talk more about that next week. Connect with us at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. You can speak personally and privately with Harold about investing in hard assets at 1-800-432-1022. We're on today prior to the Oilers and Panthers game. Pre-game show at 3:30 this afternoon. We're on prior to the Oilers game. Good luck to our Oilers. Don't forget, if you ever miss a radio show, they are streaming on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in the World Financial Report on Radio. You will find our podcast there. You can subscribe to it. The show is portable. We go anywhere you do with your busy life. As we tape today's show, everyone talking about a possible Greek exit from the euro based on what happens in their elections. And right now, the party that would like to see them leave the euro land is leading. Also, in the euro area, deflation is becoming a major concern. Germany, the inflation the weakest since 2009, and Mario Draghi is prepared to act against deflation. They believe that we will see some major quantitative easing. Also, the United States Fed minutes came out, and they don't see any interest rate rises before April. The U.S. debt soared by $100 billion on the last day of 2014. It now stands, U.S. debt, $18.14 trillion. Under the U.S. President Obama, the federal debt up $84,266 per full-time private sector worker since he has been in office. Also, Russian inflation, the highest since the financial crisis. It hit 11.4%. Food prices up 15.4%. The United States has sanctioned North Korea for hacking Sony. The head of the FBI coming out saying that it's definitive. It was North Korea because of the IP addresses. They know it was them. Also, Al-Qaeda threatening to use undetectable bombs to attack the United States in the U.S. And, of course, Harold, this week, just the other day, we had the terrorist attack in Paris. That is ongoing as we tape our show. We had one guy turn himself in. They're still looking for two others. It was an attack on a satirical magazine, but you can just see the crazy times that we're living in, and it points that you really need an allocation of hard assets in your portfolio at all times to protect yourself against the craziness that we find in our world today, Harold.
Oh, boy, you summed it up beautifully, Randy, and craziness is the right word. All these situations happening geopolitically and financially all over the world is extremely concerning. Obviously, our hearts go out to all the people in France and their family and members and everything. That is just sickening to see that these things are going on in the world today. You know, oil plunging the way that it is going to, you know, some people look at it as a positive, obviously, because the price of gasoline has dropped. But when you look at all the countries that are affected by this, both OPEC and non-OPEC members, you know, these countries are going to go bankrupt or reel from the, from the loss of their revenue. As far as OPEC members go, you're talking Algeria, Angola, Ecuador, Iran, Iraq, Kuwait, Libya, Nigeria, Qatar, Saudi Arabia, United Arab Emirates, and Venezuela. These are all OPEC members. Every one of them are hurting right now, primarily because of the price of oil dropping. We know that countries like Russia, which is not an OPEC member, but they are in huge trouble because oil prices have crippled their economy along with the sanctions that the U.S. has brought against Russia for their attacks on the Ukraine. So you've got these situations going on. Then you've got the friendly countries like the U.S. and Canada. They're in trouble because of oil prices dropping. You know, the fact is that oil below $50, it hit $48 this week. You're talking is way below production cost levels. It's below production cost levels in Canada and in the United States and in every other country. So the fact is that these low oil prices are not good for the economy, because it's basically going to put all of these OPEC and non-OPEC members into tremendous financial problems. And that's going to wreak havoc on the financial world, along with all the debt that's in the United States and in Europe at this particular point. You know, if Greece goes back to the drachma, just think about this. First of all, Greece is on the euro system. So the euro, even though it's dropped substantially, you know, from a high of 170 or 180 at one point, all the way down to about 118 that it's at right now, it's still stronger than the U.S. dollar. So the fact is that if the people in Greece or any of these European countries that have their personal money in euros, they're still okay. But if Greece goes off the euro and goes back to the drachma, just think about this. The drachma is worth next to nothing. Just like the ruble dropped by 17% or 20% or more in a very short period of time. So as these currencies fall, the net worth of the people that own these currencies fall. And that's where the major problems are going to be. So if Greece does end up going off of the euro and back to the drachma, you're going to find that the poor people of Greece are going to get hurt financially in a terrible way. So you've got all these situations going on at this particular point, and the markets are extremely volatile. You know, the fact is that earlier in the week, we saw the Dow drop almost 500 points in 2 days, and for very good reason. But then all of a sudden, the market, the last 2 days on Wednesday and Thursday, the Dow was up 250 and it was up 220, and no news came out whatsoever that would have been bullish for the U.S. stock markets. In fact, the Canadian stock markets, the the Toronto Stock Exchange, the TSE, dropped 450 points, or almost 500 points in 2 days. And a lot of that has to do with the fact that commodities are dropping mostly oil. So again, at this particular point, when you look at the paper asset markets, and those are the markets that we're talking about right now, people that trade oil on the commodity exchange, people that trade bonds and other commodities like soybeans and wheat and gold and silver and cattle and all that, anything that you're trading in paper at this point here is easily manipulated. We've seen it happen for the last several years. We've seen major fines being levied against banks for manipulating the currency markets and that type of thing. So we're heading into a very, very difficult time. We're heading into a time when people don't trust the markets, and there's good reason for that. I certainly don't trust, what's happening in the markets. I have nothing in the stock markets, nor do most of my clients. Most of my clients own hard assets, physical assets. Even though gold has come down from 1900 down to 11 and change, the fact is that if you own it physically, you haven't lost anything until you sell your position. And that would be a mistake, because with everything that Randy and I have just spoken about that is happening in the world right now, every one of those reasons is a reason why you don't want to have your money in paper. You want to have your money in hard assets. There's a very good reason why China owns most of the gold in the world. It's primarily because they don't trust the currency markets. And their currency markets, I think that China is the next major issue in the financial markets. Their real estate problems are almost insurmountable. They have buildings that are 50% full. They have entire cities that nobody lives in. They definitely 100% misjudge the marketplace and are going to pay dramatically for it. But not a lot of information comes out of China, so it's difficult to find out exactly what the numbers are. But there's no doubt that China is, along with Europe and Russia and everybody else, is in huge financial problems, and that is going to continue. That's why we continuously say that hard assets like physical gold and physical silver and diamonds and classic cars and art and anything that is not paper, something that you own physically that has intrinsic value to it, that's where you want to have your money, because we've seen it happen many times. You've seen the Dow in 1999 plummet, and everybody lost their money that was in the dot-coms. And if you remember back at that time, everybody was buying the dot-coms. They were splitting almost every other day, and the news is, was so strong at that point you could have literally thrown a dart against the Wall Street Journal and picked a stock that was going to double or triple. But look at the problems that have mounted from that. All of a sudden, when the NASDAQ got to 5,000 points, it plummeted all the way down to 1,000. What market does that? How does a market drop 90% in such a short period of time? How does the Dow in 2008 drop from 14,000 to 6,500 that quickly? The fact is that the markets are manipulated. There's no doubt about it. We all know it. In actual fact, it's in the newspapers. In the financial papers, we're reading all the time about banks and other financial institutions that have been manipulating the gold, the silver, the currency markets, the stock markets. Now, the fact is that Wall Street is probably euphoric about what's happening in the stock market, but that's a very small amount of the population. I read a report the other day that 75% of Americans live paycheck to paycheck. That is not conducive of a healthy economy. 75% of the people live paycheck to paycheck. The tremendous amount of people in the United States that live on food stamps. That means the government is supporting you. That is not conducive of an $18,000 Dow. It just doesn't make any sense at all. That's why none of our money is in those markets, because we've seen it happen many times before, that the market will wake up one day and the Dow is down 1,000, and the next thing you know, it falls out of bed because of some major problem. And there's enough major problems out there that this is going to happen again. In fact, there's no doubt that this is going to happen again, and the market that is going to do it is the derivatives market. It's a market that is unregulated. It's a market that is it is not understood. In fact, most financial institutions that trade in the derivatives market do not understand how to get out of them. And the scariest part of it all is that it's in the quadrillions of dollars. There's no doubt that what brought down the markets in 2008 and 9 was the derivatives market. And there's no doubt in my mind, and people that are a lot smarter than I am are saying that the same thing is going to happen, and possibly this year in the derivatives market again. And the last thing in the world we want to experience is another dramatic drop in paper assets like stocks and bonds and that type of thing, and be in the market at that point. Because if in your 50s, 60s, 70s type of thing, you're never going to make that money back this time. So either diversify if you need to be in the stock markets for whatever reasons, tax reasons, your RSP is in there or whatever, make sure that you have something that will offset your losses in those markets when it does happen. And there's no doubt it's going to happen. There's over $300 trillion worth of debt in the world at this particular point, and it could never be paid back. So just think about it. All they're doing is rolling it over and rolling it over. They call it kicking the can down the road. It's literally impossible for those type of debts to be paid back. And with all the geopolitical situations and oil prices plummeting at this point, whatever the reason for oil is plummeting, we all have our own reasons for thinking as to why it's happening. My feeling is that Saudi Arabia is the one behind it. And the reason is that they're really upset with the U.S., with all other OPEC nations, and that's why they haven't cut production. And they're the ones that can do it. They've got the reserves, they've got the money in the bank, and they can sit back and they can destroy this market. They can bring oil down to 20, and they can wipe out all these countries that produce oil. And they probably will do that. I've seen them do it before. It was back in the 80s when they brought oil all the way down to $10 and then shot the market right back up again when the time was right to do so. So hopefully we're going to be able to time to trade in oil properly again, and we've been very good in trading the oil market up until recently when these type of situations happen. So again, what we do anticipate is the price of oil will continue to drop. It's going to wreak havoc on the financial markets. The only positive thing about oil prices dropping is that it helps the consumer with lower price oil. But again, it's going to put countries out of business, and it's really going to wreak havoc on the financial markets. Many of the top stock companies are companies like Mobil and Shell and Chevron and those type of companies, and they're all in financial trouble, as are major countries. So again, we do anticipate that there will be another major rally in gold and silver, and I mean a rally of unbelievable proportion. I think that we could basically see the market fall again, we do believe that gold could possibly retest the 1150 level and possibly drop down to 1,000. If the U.S. dollar continues to strengthen against other currencies, again, especially countries like Russia and Europe, where, again, they're in tremendous financial trouble, we should see some real fireworks in the market this year. The first quarter of the year is going to be very cautious and very volatile, but the second half of the year could be extremely difficult in the markets. And again, you must be prepared for that. These are almost unprecedented times. These are times that we've never seen in our lifetime before. And again, you need to be prepared for it. My strongest suggestion is to be conservative, not to speculate in these type of markets, not to think that you can time the markets, because these are not your normal markets. These are markets that are being manipulated because of government situations. The governments are so drastic and in so much trouble financially at this point that they deal with the markets and then they'll deal with the aftermath afterwards. And that is what appears to be happening. So, again, it's a time to be extremely conservative, to be in the type of assets that protect your money where you're not going to lose it. If the Dow drops back down to 8,000 or 10,000, most people will never recover from that financially. If you're in your again, your 60s and 70s especially, the chances are you'll never, ever see that money back again. So be cautious and be smart about it and deal in the type of assets that give you the opportunity to keep your money. And that's the most important thing. We all want to make money, but the most important thing at this point is keeping our money, and that's why we're recommending diamonds, for example. Certain diamonds never lose their value. And people that invest in that type of asset find that by keeping your money in an asset like a rare diamond, at least you're keeping your asset to where you're not going to lose it. And that's extremely important. And there are other diamonds that go up tremendously in value. We view gold as that type of asset also. Gold is a very strong asset that should be doing tremendously well at this particular point if it wasn't for the fact that the banks are allowed to short more gold and more silver than exist in the world today. And it's a really phenomenal situation when you think about it. You know, we've always been taught the basics of the economy is supply and demand. When demand for a commodity is extremely high and the supplies are low, the prices will always go up. If there's demand for a product and there's none of that product around, what would you be willing to pay for a loaf of bread or a gallon of milk if there was only one of them left and you needed to feed your family? Would you pay $100 if you had it for a loaf of bread? Would you pay $200 for milk if your family was starving? That's supply and demand. So how in the world does it not work for gold and silver? It's impossible, and the governments have come out, both the Canadian and the American government has both come out when talking about the minting of gold and silver coins and saying that they do not have enough physical precious metals to mint this very profitable business for them. So how in the world is the price of gold and silver falling if there's no physical gold and silver and the demand is extremely high? That's exactly what I'm talking about. That's when I say that the market is manipulated, why people are sitting there scratching their head and saying this doesn't make any sense. And we say that all the time because it's actually happening right in front of us. You need to own physical gold. Physical gold is going to be one of the best assets you could ever possibly own. I do believe gold's going to drop further. So again, we will certainly let you know when we want to be a major buyer of gold, but then we anticipate that the price of gold, when the time is right, is going to literally skyrocket like it did back in 1980. You see, in 1972, the price of gold was at $35. We started to see signs of inflation, and gold rallied all the way up to $200. People were euphoric. They were trading gold. They were buying it like crazy. Then all of a sudden, gold dropped from 200 back down to 100, and people started to panic and sell everything that they had in the gold market. After that was done and gold fell in half, gold went from $100 to $850 in a very short period of time. That's the way we're viewing this market at this point. Gold went from $250 all the way up to $1,900, very similar to the move from $35 to $200. Then gold went from $1,900 all the way down to $1,150, very similar to the drop that we saw when gold dropped from $200 to $100. It was almost a 50% drop. And then when nobody was interested in gold anymore, it took off and went to $850 in just a very short period of time. That's what we think is coming, and it's going to come possibly at the latter part of this year. So if we do see another washout in the market where the traders bring the price of gold back down to about 1,000, and the reason that they'll do that is that the U.S. dollar is now trading at 92 cents. When gold hit $1,920, the U.S. dollar was 20 cents lower than where it is right now. It was at 72.50. So that's the difference in what's happening in the gold and the currency markets at this point. Look what's happening with the Canadian dollar. The Canadian dollar is trading right now at 82 cents compared to the U.S. dollar. That's why gold is down at this particular point, along with what the banks have been shorting it. But there will be a time in the very near future that is going to totally reverse itself, and gold could easily go not only back up to $1,900, but could literally go back up to $3,000, $4,000, or $5,000. And that's where we do believe that the price of gold is going to be. So again, you don't want to leverage it. You don't want to be in anything but physical gold and silver. You want to own it outright. The reason that we're bringing gold up to you is that gold did not drop as much as silver. Gold went from $1,920 all the way down to $1,150, where silver went from $50 down to $1,450 a few weeks ago. We're still very, very bullish on both of those markets. Very soon, I'm hoping in the month of January, our importer's license will be here for our physical gold business for you, where you'll be able to buy physical gold through my company, HES Gold. You're going to be able to go online, not deal with any salespeople, and buy physical gold at spot price with no commissions. As soon as that is available, you'll be the first to know about it, and we will make certain that our clients in Canada are able to buy gold with no commissions at spot price. So, Randy, again, there's a lot of reasons to own hard assets at this point. Almost every single day, something is happening in the world that convinces me even more and more that we're in the right place at the right time.
We advocate hard assets, and you can speak personally and privately with Harold about investing in gold, silver, diamonds. Connect with him at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Telephone number 1-800-432-1022, 1-800-432-1022. Get our free weekly newsletter. It's the companion to our radio show. This week, lots of information on the oil market. A whole section on oil along with diamonds and gold and silver. It's something you can go through in minutes or spend hours if you want. Ask Carol about getting your name on the list for our free weekly newsletter. And from our newsletter, we have some of our quotes of the week. James Turk saying, "The central planners have two alternatives. Renege on the debt, and didn't it just seem like yesterday the U.S. debt was around $14 trillion, and here it is now over $18 trillion? Just a stunning number. He says renege on the debt or destroy their country's currency. Those two alternatives have to be kept foremost in mind when we look to the year ahead and decide where to deploy our money. And it means that gold remains a good place to be, particularly given how it's undervalued." He also says about silver, "I expect silver's outperformance to pick up momentum in 2015. The gold-silver ratio will fall as both gold and silver move higher this year. So as massive as I expect the rally in gold to be this year, silver will climb even higher in percentage terms and continue to outperform gold on the upside." Also, some interesting quotes from Bill Fleckenstein. And Bill saying, and he's a hedge fund manager, has made a lot of money shorting stocks during the financial crisis, some of the debt instruments that brought down the financial markets. He said, "People are going to lose confidence in the central banks, and there's going to be an ugly dislocation when that happens. Will they come back for another round of money printing? I'm sure the Fed will come with quantitative easing again when it turns out this one doesn't work. But for the moment, the people who believe in the fantasy of central banks delivering economic nirvana and that they can levitate financial markets forever, those people who believe that are winning the battle, and for those of us who say this is going to be an ending in disaster, aren't." But he said, in the long term, this is just a short term. You have to look at the long term, but really in the short term, they may be winning the game, but in the long term, they will not. And Fleckenstein also saying, they're trying to make the stock market go up and drag the economy along with it. It's not going to work. There's going to be a big accident. When people realize that it's all a charade, the dollar will tank, the stock market will tank, and hopefully bond markets will tank. Gold will rally in that period of time because it's done what it's done because people have assumed complete infallibility on the part of central bankers. We advocate hard assets. Now is a time to have an allocation of diamonds and gold and silver in your portfolio. If you would like to learn more, all you need to do is go to Harold's website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. Or call Harold at 1-800-432-1022. That's 1-800-432-1022. The most secure and profitable investment, millions of years in the making, Rare Colored Diamonds. When you go to rarecoloreddiamonds.com, you're looking at the world's finest investment diamonds. And if you're interested in investing in nature's art, private, portable, stable wealth diamonds, speak with Harold today about starting your own diamond investment portfolio and receive a free copy of our weekly World Financial Report on Radio newsletter. Go to rarecoloreddiamonds.com or call now 1-800-432-1022. Coming up in about an hour, we have the Oilers pregame show. The Oilers are playing the Florida Panthers. Coming up after the break, we'll talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on Thursday, January the 8th, 2015. Harold is, normally we tape on Friday, but Harold is very busy with lots of business functions over the weekend and on Friday. Don't forget, we are about a half an hour away from the Oilers pregame show. Oilers playing the Florida Panthers in the pregame show on 6:30 CHED, just after 3:30. Connect with us at rarecoloreddiamonds.com, rarecoloreddiamonds.com. Harold's telephone number to speak with him personally and privately about investing in gold and silver and diamonds, 1-800-432-1022, 1-800-432-1022. Harold's other website is hsfineauctions.com. We'll talk more about that here momentarily. Don't forget, if you ever miss a radio show, they are archived on Harold's two websites streaming, rarecoloreddiamonds.com and HESradio.com. Go there. You can listen to the shows anytime you want. We have a podcast. It's through iTunes. Have iTunes on your portable device. Type in The World Financial Report on Radio. You can subscribe to the podcast. It will come in automatically. You can listen to it anytime you want on your portable device. Our radio show is portable. We go anywhere that you do. Get a free copy of our weekly World Financial Report on Radio newsletter. If you're getting any other newsletter, you're not getting the official World Financial Report on Radio newsletter, the companion to our radio show, the articles, the stories that we talk about, the info that Harold and I see on a weekly basis. If you'd like to take a look at it, get your name on the list. We'll send it out to you free of charge via email. And it's something you can go through and be completely up to date on the markets in about 5-10 minutes. You can do it on an iPad, a smartphone, whatever. You can spend hours, if you want as well, delving into the stories further. Get our free weekly newsletter. Connect with Harold at rarecoloreddiamonds.com or 1-800-432-1022. Our featured diamond of the week. And you can see it at rarecoloreddiamonds.com. Click on Featured Diamond. It's a .80 carat, radiant cut, fancy vivid, yellow, internally flawless. And this is a big, chunky yellow diamond. And Harold, when it comes to yellow diamonds, this is one of those diamonds that's a museum-quality diamond that you'll only see at rarecoloreddiamonds.com. It's the best of the best. And when it comes to developing a portfolio of diamonds, sure, you want an Argyle, but I know you've been a big advocate for a long time of investing in yellow diamonds as well.
You bet, Randy. Again, yellow diamonds get their color from nitrogen, believe it or not. Nitrogen seeping into the ground will turn a diamond yellow or orange. both very, very rare colors. Now, there's several different colors of yellow, and not all of them are investment quality. In fact, that's the same with most colored diamonds. Just because a diamond is colored does not mean that it's an investment quality diamond. The reason that this one is, let's just examine it. First of all, it's a vivid yellow diamond, meaning that the way that the Gemological Institute of America, GIA, grades diamonds, and you never buy a diamond without a grading report from GIA. But basically, there's all these different colors of yellows. There's faint yellow, which is just a very poor quality white. Then there's light, and then there's fancy light. Now, fancy light, actually, if it's a flawless diamond, is considered investment quality, depending on the clarity and the color. But the price of the diamond is determined by how saturated the color is. So when you start to get into the fancy yellows, which are canary diamonds, they become more pricey. Then you go to the fancy intense yellows, and they're more pricey than the ones below that. And then you've got the fancy vivids, which this one is, which is the highest color grade that the GIA will give. So this is the highest saturated color diamond that you can get. It's called a fancy vivid yellow diamond. The other thing that you want to look on this particular diamond is the clarity. This diamond has no flaws. It's internally flawless, which is the best clarity that you can get. After that is VVS1, which stands for very, very slight inclusions, meaning that there's probably one very slight inclusion, and you won't be able to see that with the naked eye. Then you start going down to the VVS2, the VS1s, the VS2, the S's, and all that. In a yellow diamond, the thing that is important is the saturation of the color and the clarity, and the fact is that this is a phenomenal diamond. The reason I put it up as a featured diamond, I do have diamonds that are larger, over a carat, but this diamond is priced right. It's a great diamond to start your collection with, and it's a diamond that definitely goes up in value. These type of diamonds increase by about 15% a year. They never ever decline in value because they're extremely difficult to get. In fact, the opportunity to get a vivid yellow flawless diamond today is extremely difficult. So this one is just slightly under a carat. It's just over 3/4 of a carat. It's priced right. And the fact is, as a starter diamond, it's an excellent diamond to get started with, and it's a diamond that will increase by at least 15 or 20% a year. As you get into larger diamonds, the ones that are over 2 carats, only one diamond in 15 million is over 2 carats, and I can assure you, very few of them are ever flawless. We have those. We have those in inventory because, again, they're investment quality diamonds, and that's what our business is. Our clients invest in diamonds for the longer term. You hold on to these diamonds for 10 or 15 or 20 years, and the amount that they go up is absolutely stronger than almost any other market that you'll see. So we love the yellow diamonds. They have to be flawless, and they've got to be either the fancy light yellows or up from there. If you could ever get a 2, 3, 4, 5 carat, now you're starting to get into diamonds that will not only increase because of the color and the clarity, but also because of the size. Because when you get a 5-carat yellow flawless diamond or a 4-carat yellow flawless diamond, you've got something that barely exists in the world today. We have diamonds that start at $20,000. We have diamonds that go all the way up to $40 to $50 million. We do have a 100-carat perfect D flawless white diamond. That's one of the rarest diamonds in the world. That diamond's worth in the range of $40 to $45 million. We're also partners on one of the largest pink diamonds in the world. We just bought a 40-carat pink diamond that is worth fortunes. And really, there's very few people in the world that can afford a diamond like that because it's more in the $50 to $60 million range. Most of my clients that invest in diamonds invest under $250,000. In fact, in the 20 to 50,000 range, you could do very, very well with yellow flawless diamonds. In fact, you could get a 2-carat yellow flawless diamond for under $50,000. That's a diamond that in 10 years from now could be triple that price. Then the other diamonds that we recommend are the pink diamonds, especially the diamonds from the Argyle mine. The Argyle mine is a phenomenon. It's a mine that was discovered in 1986, and it's in the East Kimberley district region of Western Australia. And it's a phenomenon because this mine produces 30 million carats of diamonds a year. 30 million carats. The majority of those are low-grade white industrial cut diamonds, which are basically worthless. They're diamonds that are used to cut other diamonds. So basically, out of all those 30 million carats of diamonds that come out, only about 2% of them are colored diamonds. And Argyle is most famous for their pink diamonds, because out of this amazing mine that produces 30 million carats of diamonds a year comes the world's supply of pink Argyle diamonds, known as the most concentrated form of wealth in the world. These diamonds are a phenomenon because nobody knows what turns them pink. We know that nitrogen will turn a diamond yellow or orange. We know that uranium will turn a diamond green, and we know that boron will turn a diamond blue, but nobody knows what causes a diamond to turn pink. In fact, in the newsletter this week, there was an article on pink diamonds, and they discuss exactly that. Pink diamonds are a phenomenon. They're known as the most concentrated form of wealth in the world. These diamonds never decline in value, and because the mine is going to close in 2020, which is only 5 years from now, these diamonds are about the best investment you could ever own. We anticipate that the price of these diamonds will increase 5 to 10 times what the prices are today when this mine closes down. So basically, as an investment, a $50,000 pink diamond today could be worth $500,000 in 10 years from now. I doubt there is any other market in existence that does what the pink Argyle diamond market does at this particular point. Just to give you an indication as to what these diamonds are doing at this point, fancy light pinks, which are not highly saturated, but they're a beautiful soft pink, they've gone up 20% a year for the last 5 years. It means that if you bought a fancy pink diamond 5 years ago, your investment has doubled at this particular point. I highly doubt that there is any other investment out there that does that with the lack of risk that you have in the diamond market. Then, when you look at Argyle pink diamonds, the fancy pinks, the fancy intenses, they've tripled in price since 2002. So in the past 12, 13 years, that investment has tripled, gone up 300%. And the fact is that those diamonds are almost non-existent now. There's very few of them available. We invested a large amount of money into buying Argyle pinks because we know that this is a phenomenon that will never, ever happen again. There is not another diamond mine in existence today that does what the Argyle mine does, which is produces 95% of the pink diamonds in the world. And if you think that that's a big number, you're incorrect, because the amount of pink diamonds that come out of the Argyle mine doesn't even fill a champagne flute. So you're talking about a tiny, minuscule market that is so valuable and so rare, and soon it will be all gone. If you're one of the fortunate ones to own an Argyle pink diamond as an investment for your future, there's no better investment that you can make. If you buy it for retirement purposes, a $100,000 Argyle pink today could be $1 million diamond in 10 years from now or less. And we do anticipate that that is what's going to happen. In fact, it's starting to happen right now. I mentioned before when we talked about yellow diamonds that the highest saturated color is vivid yellow. Well, it's the same thing with pinks. Vivid pinks are the highest saturated color, and those diamonds go up more than any other diamonds do at this point. We just experienced in the last 10 years that blue diamonds increased from $200,000 to $2 million a carat in the last 10 years. We anticipate the same scenario happening with pink diamonds. Now, what else is going to happen is that when the Argyle mine closes, it means that the remaining 5% that come from India and South America are basically going to skyrocket in price. So to own a pink diamond today is one of the major investments you could possibly make. They're not inexpensive. They're not for everybody. Again, to own a pink diamond, you're talking about owning a diamond starting in the 30, 40, 50,000 range and going up from there. They're the most concentrated form of wealth in the world. They're smaller diamonds. 95% of them are under a quarter carat, but they're still worth a fortune. To get a diamond that's a half a carat, a pink diamond that's a half a carat, you got something that's worth hoarding. I'll also let you know this, that my wife's girlfriend inherited a 5-carat pink diamond from her grandmother. Her grandmother bought it 50 years ago for $50,000. Today that diamond is worth in the $4 to $5 million range. So, with everything happening in the world today, with what's happening in Russia and France and in Europe and in the United States, and oil prices plummeting, and terrorist attacks, and people figuring that the currency markets are going to plummet, and not knowing, with all this uncertainty going on in the world today, it's nice to own an asset that is not paper, that the government doesn't know about, that is portable private wealth. If you ever needed it, you can travel with it, and you cannot do that with any other asset. On top of that, these assets actually go up in value and never decline because there's so few of them available. We're talking about almost the perfect investment, an investment that you own outright that somebody does not hold for you, that could be put into jewelry and could be worth an absolute fortune. In fact, in the newsletter also this week under the diamond section, not only is there the featured diamond, but on top of that, there is all these reports on diamonds. So we featured that beautiful vivid yellow. On top of that, the article, What Makes Pink Diamonds Pink? You definitely need to read that. And then there's other articles out there, like Wall Street Journal's article, Dazzling Returns on Jewelry. So I own 3 companies that are in the diamond business, actually 4. One is Rare Colored Diamonds, which is the investment aspect and the investment business that we have, which sells some of the world's rarest diamonds. Then we also own Diamante Atelier, which is the jewelry section of our business. We have some of the most beautiful diamond jewelry you could ever possibly imagine. And when you read the report that's in the newsletter this week from the Wall Street Journal on dazzling returns on jewelry, almost all of our diamond jewelry is colored diamonds. And they are priced right, and they are phenomenal to wear, and then give back to us to sell. And the third company that I own is probably the most important of all. It's H. Siegel Fine Auctions. It's been written up many times. We've been interviewed 5 times between Fox News and Bloomberg. But the one thing about the diamond market that never existed before was a secondary market to resell diamonds, and that's what we invented. We invented H. Siegel Fine Auctions, which is the only company of its kind. It's a live, real-time auction site that sells very high-end collectibles like very rare diamonds. Now, at this point here, we hold auctions. We've had 14 auctions so far, and they've been tremendously successful. We also hold auctions where we sell some of our beautiful diamond jewelry and loose diamonds to raise money for charities like the Susan G. Komen Breast Cancer Charity. In fact, this weekend, on Friday, we're invited to Nancy Brinker's home to do a fundraiser for Susan G. Komen. And then on Saturday at Donald Trump's home in Mar-a-Lago in West Palm Beach, my company and my wife and I, donated Oprah Winfrey's Argyle pink diamond earrings, which is probably something that will raise about $50,000 to $70,000 for the charity. So that's what's going on this weekend. We have major auctions coming up. In fact, we'll announce next week a very special and private auction for our Canadian clients, which will be on very rare Argyle diamonds. Now, not only does Argyle produce pink diamonds, which are the rarest diamonds in the world, from time to time, a very rare Argyle will come out of the mine. It could be blue. It could be yellow. It could be violet color. It could be pink, and it could be red. So the fact is that I own some very, very rare Argyles, and the way that you can tell that they're Argyles is that they're laser inscribed on the girdle, and then on the GIA report, it's got the Argyle signature on the bottom. So basically, we will have an auction coming up probably the first week of February for our Canadian clients that will allow you to invest in some of the rarest Argyle diamonds that you've ever seen, and as a bonus, because again, our Canadian clients are our Canadian clients. We love them and we care for them. We're going to do this auction in Canadian dollars. And the Canadian dollar, as most of you know, has fallen substantially over the last year. In fact, the Canadian dollar is now 18% below the U.S. dollar. But it's imperative that our clients make money, so we're willing to sell these amazing diamonds in Canadian dollars, and we're going to have one of the most exciting auctions coming up. I'll announce it next week once I put the catalog together, but this is going to be a lot of fun and give our clients an opportunity to own some assets that are so valuable that down the road you'll make a fortune with these diamonds. So again, Randy, we couldn't be in a better time when it comes to this type of asset because they're portable private wealth. They never decline in value because the mine is closed closing down. The prices are skyrocketing. All these reports are coming out on diamonds, and this has been our business. We brought this to you 10 years ago when I wrote a report called Rare Colored Diamonds, the Best Kept Secret. Nobody knew about this. Now we built the secondary market to resell our clients' diamonds, and that is going to be one of the biggest businesses that we have. Not only for rare colored diamonds, but for other hard assets like we're scheduling an auction which is going to be a diamond and Ferrari classic auction. So it's going to be classic Ferraris and colored diamonds, where we're going to hold an auction at a very famous Ferrari dealership here in West Palm Beach, and husband and wives are going to be invited, where we'll sell a diamond and we'll sell a car. And when the husband says to his wife, honey, I want to buy this $500,000 Ferrari, she's going to go, well, I want to buy this $100,000 yellow diamond. So it's going to be amazing. It's going to be very heavily publicized, through some of the major publications in the country. And this is, again, something that nobody else in the world has built. And we built it because the diamond business needed a secondary market, and that's exactly what we're bringing to our clients. So, again, we got a lot of very exciting things coming up. With all the uncertainty in the world markets today, it's amazing to know that rare colored diamonds are doing tremendously well, and now we have not only a tremendous inventory for you, but on top of that, we have the secondary market to resell it, and we only make money when you make money. We get 10% of the profit, and our clients get all the rest. So, again, look at rarecoloreddiamonds.com. Go to Diamante Atelier, and you'll see some of the most beautiful jewelry. In fact, Randy has put our catalog into the newsletter, so all you have to do is click on to the Diamante Atelier catalog and see some of the most beautiful diamonds you've ever seen in your lifetime, and we'll keep you updated as to when the next auction is going to be.
Our featured diamond of the week from rarecoloreddiamonds.com is a .80 carat radiant cut fancy, vivid, yellow, internally flawless. .80 carat, radiant cut, fancy, vivid, yellow, internally flawless. And I agree with Harold. If you don't get our free weekly newsletter, phone and speak with Harold at 1-800-432-1022 or connect with him via rarecoloreddiamonds.com and get him to send you that Diamante Atelier holiday catalog. It is amazing. If you get our newsletter, it's in there. Also, the BBC did a story a couple of weeks ago. We have it. What makes pink diamonds pink? You won't believe what they've come up with. It's amazing. Also, the Wall Street Journal, dazzling returns. And from Bain & Company, there is a special report on timeless gems in a changing world. And Bain & Company have done an updated report on diamonds. It's an extensive report. They are very, very bullish on the diamond market and diamonds as an investment. Harold, we have 2 minutes left. You mentioned a fourth business, and that fourth business has to do with loose diamonds, rough diamonds.
Rough diamonds, exactly. We've been in the rough diamond business now for 3 generations, and we've expanded our business and allowed our Canadian clients to join in with us. Basically, it's a business that's been around, like I say, for 3 generations. We mine rough diamonds, and our clients are cutters and polishers. They've been our clients for generations now. We've allowed our Canadian clients to invest with us. It's a very lucrative investment. It pays 24% a year U.S. dollars. If you invest $100,000, for example, every month you will receive 2%, so you'll get 24% a year. You'll make $24,000 a year for 2 years and then return of your capital. And what we did is that we put the equivalent amount of the investment, we put in colored diamonds in there to protect any capital investment that our clients make. So, again, it's a very rare opportunity. I know it sounds too good to be true, but I can assure you that we've been doing this for generations. We've now included our clients in it. Many of our clients are retired, and it gives them a second paycheck, and we pay every single month. So if you're interested in that, it pays 24% a year for 2 years, and we pay every month, and that's in U.S. dollars, and it's in our rough diamond business.
Thank you very much, Harold Siegel.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Connect with Harold. Anything you've heard about on today's show, connect with Harold at rarecoloreddiamonds.com. Speak with him personally and privately at 1-800-432-1022. 1022. Good luck to our Edmonton Oilers. Oilers and Panthers pregame show is on the way next. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.